We are now joined by Mriganka Jaipuriyar, who is Associate Editorial Director at Platts. Mriganka, thank you very much for joining us here on NDTV Profit. It's a pleasure to have you on the show today. What's your sense? For the first time, we have seen in this particular year, crude oil prices hovering near $50 a barrel. What's your outlook on the prices?
Hi, Hina. We have seen a significant jump in crude oil prices since earlier this year. Not much has changed from the demand side, but like you mentioned earlier, we've seen some supply side factors affecting crude oil prices. So we've had some disruptions. I wouldn't necessarily call them short-term disruptions because they have lasted for fairly long. I mean, the Canadian output has been cut by about over 1 million barrels per day since earlier this month. We've seen Nigerian oil production falling by about 800,000 barrels per day compared with the start of this year. Iraqi exports have also taken a hit due to some infrastructure, electricity-related issues at their southern terminals. We've had Libyan output falling further from what it was. It was already at very low levels, and it's fallen further. So as you can tell, we've had about over 2 million barrels per day out of the market over the course of the last couple of few weeks. So all of that has of course impacted prices in the near term. Now, if we want to take a longer-term view, we can also see some structural balances happening on the supply side. For example, Chinese oil production. I know China is always thought of as one of the world's top oil importers, but it's actually a fairly large producer of crude oil. It produces well over 4 million barrels per day of crude oil, and we've seen China's oil production declining. What this would mean is China's demand for imported oil rising. So, that would have an upward impact on prices. We've had Venezuelan production falling. In the first quarter, Venezuelan production has fallen by about 5% to about 2.5 million barrels a day. So even though, and we've had the IEA coming out and saying that they expect non-OPEC supply, which is mainly production from the U.S., declining by about 800,000 barrels a day this year in 2016. So even, while we've got these supply disruptions, near-term disruptions, structurally as well, the supply scenario is changing, which is what is leading to this rise up in prices.
What's the level for crude oil price that you are factoring in the near term and by the end of 2016?
We don't forecast on oil prices, but if you generally look at most analysts and what they're saying, it's about $50 to $60 by the end of the year. The reason I think what is keeping a cap on oil prices, I mean, in normal situations, a 2 million barrels per day supply disruption in the global oil markets would have led to much larger price spikes. What has kept a lead on prices is Iranian supplies coming back on stream, and stocks are at very high levels in the OECD countries. So it's going to take a while for prices to really have a very sustained upward momentum and for that to happen, we will have to see it draw down on stocks. I mean, I think Iranian supplies are already factored into the prices. So I think it's the stock levels that are going to play a very key role going forward in determining pricing.
In terms of bottom, have we already seen that according to your analysis?
I would think so. I think that $27 that it hit back in January is going to be, I don't foresee oil prices going back to that level. Like I said, Iranian supplies have already been factored in. We are expecting the market to see a structural balancing going forward. A lot of the excess supply, the supply-demand gap, which has been at over 1 million barrels per day in the first half of this year, is expected to come down quite drastically in the second half of the year. So I can't imagine what would put a downward pressure on price to go back down to the late 20s or early 30s. But, the oil markets are extremely dynamic, and you never know what happens, right? But if you just look at the factors on the ground today, I doubt oil prices will sink to those lows in the near term.
All right, so $27 a barrel certainly doesn't look like, we are going to revisit as far as crude oil prices are concerned. A quick word on how Saudi Arabia going forward is going to be, playing. We have the new oil minister in place out there. They have spare capacity as well. Do you see production level increasing from their end, considering in the summer season, even the demand goes up? How would you read that situation?
In the summers, Saudi Arabia traditionally has produced, if you look at the past few years average, they have produced over an extra 500,000 barrels per day to meet their domestic demand and not impact exports in any adverse way. I expect them to stick to this policy. The new Saudi Arabian oil minister, Ali Al-Fali, has said very categorically that he is going to maintain Saudi Arabia's current pricing policy, policy. I won't call it a pricing policy, but current policy of maintaining and growing market share. So in terms of so that certainly rules out getting into any sort of negotiations for a production freeze so that is ruled out. Now the question is, will Saudi Arabia start to pump more oil? So they do have spare capacity, but how much of that is sustainable spare capacity? They produce 12 million barrels per day today. How does that impact their production, say, 2 years down the road, right? That's something which they have to consider as well. And in most from what we know, Saudi Arabia's sustainable production capacity is at the levels at which they're producing right now. So I don't expect them to suddenly come out and start pumping more oil into the market, because that's also not beneficial to them. They are already seeing a slight uptick in market share. I doubt they would want to come in and launch a policy which is going to pressure prices down and harm their economy more.